Good morning, traders. Thank God it is Friday. And what a Friday are we having today, right? I mean, everything's on the move, especially the euro and the yen. But let's have a little overview of what's going on before going more into detail on everything that's moving and shaking in this market. And as per tradition, let's stick with China first of all. Just a couple of lines. There is apparently a bit of issues with the Chinese refiners now, and people are thinking that the problems over there in China are far from being resolved. There was this 50-year special Chinese government bond issuance today, and that attracted loads of interest. It's 50 years, so people in the really long term are still looking at lower Chinese yields because if you look at it, the bond issuance was supposed to attract 258% yield, and it came in at 253. So everybody absolutely went over there. In other times, it may be a bit positive, but in this case, it is just people not believing in the Chinese revival yet. And as a matter of fact, then the analysts came out later on saying that they still expect China to lower the interest rates later on this month. Story to be followed. On the staying in Asia, there was this conference in Singapore around precious metals, and the overly big majority is still looking for gold at least, and precious metals in general to keep a bit throughout the rest of this year. So though Asia is still looking at the precious metals very, very positively. So that is one to keep in mind when we trade those, of course. Other news, and then we're coming a slightly closer to home before I dive into Bank of Japan and other things that's been going on. South Africa seems to have found an agreement on the government, so it's going to be mainly ANC and the Democratic Alliance together with, I think, IFP will be in there as well. The parliament reconvenes from today, so we should have a lot of speeches today, likely going to be very upbeat, but as we have seen, and as I was kind of expecting, we found positiveness on the announcement in the rand, but now it's already losing a little bit of steam. May have to do with the dollar in general, but especially I think with the market now wanting to see what they really are going to come up with in South Africa. On what am I going to say? Yesterday as well, and then I'm jumping to Europe, and then afterwards I'm going to go back to what has happened yesterday and what has happened overnight as well. So Germany yesterday, they seemingly are going to need an 11 billion extra package to fund deficits. And it's already putting stress on the fragile coalition that they have over there. We know that the ruling coalition has been suffering some losses as well in Germany on those EU and local elections. And there's still some local elections to come in the eastern part of Germany later. So that's putting stress on the coalition over there. And that, I reckon, has also some to do with the heavy tone of the euro, which is of course mostly related to the French stress that we see right now. But that is one that came out yesterday as well, so that is one to keep in mind. And then we had a few ECB speakers. F.A.C.E came out saying that the inflation slowed markedly. Rate cuts are likely to be slower in this round than the hikes were in the round that we saw post-pandemic. A bit of a no-shit Sherlock moment there from F.A.C.E. We probably all know that those cuts are going to be much slower. And Kazakhs came out saying that they still need to be cautious on on the rate cuts and need to keep a certain degree of restrictiveness going forward. And then let's move over to a bit of the news that we saw. And for a couple of days, we traded the dollar around everything that was going on. The CPI, the FOMC, PPI yesterday came in a tad below expectations as well. The year-on-year came down a little bit, but the prior one was revised a tick higher. Jobless claims rose also a tiny bit. Nothing alarming yet, but it's one of those yellowy flags that I usually talk about, where it is possible to if we see a continuation of this trend that may get the markets thinking a little bit about what's going on in the jobs market for real. But that had a very temporary blip only because the market was already looking back at what's happening in the European politics and trying to look forward to what's happening, what would happen on the Bank of Japan, of course. And later on, we had McClem out as well. He's keeping his relatively dovish tone, saying that there are, of course, limits to the decoupling from what FOMC may do, but that there is still some room for it to happen. So the Canadian dollar is also remaining a bit under the cush in what we are seeing in today's markets. Next on the agenda was were the Kiwi business sentiment coming down just slightly. The food price index as well, dipping back under the zero line here, as we can see, putting small pressure on the Kiwi. But I think a lot has to do with a bit of risk off as well that we are seeing. The Kiwi, though, we will have to keep an eye on it because we are back below this 61.40.55 zone, which is a bit my measure point of strength and weakness in the Kiwi, and that may have some importance. And then we've had the Bank of Japan. In the meantime, in between the Bank of Japan, we also had a few data out. Industrial production is still behaving quite weak, giving back a fair bit of what it's made last time, but this activity index is still not great, although it's a very volatile number, right? We see the last one was +12, and now this one is -10. Further, we had a bit of stocky CPI data out, sticky, but coming off slowly, okay? And then we had French CPI out, the HICP a little bit lower, but still a tad higher than previous times. So not a lot to see there. Most of what's going on in the euro right now is purely politics, okay? Right. Bank of Japan. So they left their interest rates unchanged. They left the bond buying also unchanged compared to what they decided in March. But what the outlook is well, the outlook, what their program telling us is perhaps a bit different there. So they've put in place a couple of meetings with the market participants to see how the market thinks about them reducing further the bond program. And Ueda, during the press conference following the Bank of Japan meeting, said that they plan to reduce the bond buying further to let the long-term interest rate fluctuate a bit more. The plan is to reduce the bond buying immediately at their July meeting. So before that, they will have a few meetings with the market, and then they will start to reduce the bond buying at their July meeting. We don't know by how much yet. He didn't say, he didn't give any numbers, but he said that the reduction would be gradual over the next 2 years, but substantial. So that is something that after an initial move higher in the dollar yen and yen pairs, we saw partially already the yen stabilize. And what's happening right now is actually the yen catching a pretty serious bit because the risk is coming off, yields are coming off elsewhere, and the outlook of them doing something is potentially keeping the market on its toes. If there wouldn't have been anything else happening in the markets, I would have suspected that the yen would remain a bit um, under the cosh, or let's say a bit offered, but there's so much going on elsewhere that I think this is what is keeping the market on its toes right now, and actually putting the yen, dollar yen, a little lower or around where it was around the Bank of Japan, but the all the yen crosses are now coming off on uncertainty elsewhere. Okay, and let me run through my notes here for a sec. Um, oh yes, you had also said that a rate hike in July was now data dependent, but really a real possibility as well. So that is an extra thing that the market took into account to cap the mainly the dollar yen, let's say, and all the yen crosses. All right, so that is for the Bank of Japan. Then we are coming back to Europe because we need to talk about this European situation, right? So first of all, and that was one of the first lines coming out. We saw the euro coming already under pressure yesterday. Once the US data were out of the way, euro crosses were quite heavy across the board. Euro dollar came in offered. I think after a couple of days of dollar trading, the market started to focus back on trading the euro, and that is what we are seeing now. So this morning, the French Finance Minister Le Maire was asked if the current political crisis could lead to a financial crisis, and his very short answer was yes. And the market didn't need much more to start to hammer the euro again. We are now trading well below those support levels around 107.30 that we saw, support levels in even in the high 106s. The euro is really suffering. Adding to that is that the French left side has now built a coalition to counter, first of all, the far right side led by Marine Le Pen, of course, but also to counter Macron, as they said. So the articles are spreading in the market saying that Macron's party is actually really at risk here, and that is for sure not a good thing. If you look at the euro, what is happening there, the additional issue here and the additional problem here is that all those left parties, they have very different programs, and they don't necessarily agree on a lot of things. So that is really what the market is worried about now. Add a bit of that German strength that I spoke about earlier, add a bit to as well that the Belgian government is still not formed either. So that is really weighing on very heavily on the euro. And I'm going to show the differentials, and at the same time the euro yields a bit later, and just to show you how the situation is evolving right now. So those are really the problems that are weighing on the euro right now, because this left-hand side, really, they are diverging on virtually everything. They are diverging on their approach to Ukraine. They are diverging on the ECB rulings. They're diverging on fiscal policy as well over in France. So it really there's a risk of a big mess in there right now. Okay, I think that for the headlines, yeah, okay, there's another one, perhaps weighing a little bit on the cable, but still it's we see euro sterling being still very offered as well. But the UK Farage's part is back, and his Reform UK party in the latest polls is actually seeing more votes now than what Mr. Sunak's Conservative Party is getting. So the intentions for the votes are getting even more muddled. It's not yet weighing as such, I would say, on the sterling. What we see this morning, sterling lower, is actually a result of risk getting a little bit of a beating, very uncertain situations. But we're still turning around 127 in the cable, and we are now in the very low 84s on the euro sterling. So it's not really yet a sterling story. The UK politics, I still think we need to have the Bank of England first next week, and knowing what they do before making any conclusions or drawing any conclusions for the elections coming up. And with that, friends, we can look at what is happening in these markets. First thing that's happening here is we see the French, German, and I'm only taking the 10 years, but it's the same thing in all the maturities. The French spread over Germany is really ramping higher, and that is the main thing now, driven by those politics that is weighing on the euro as well. Okay, so this is one that really you should keep an eye on to know how the euro is evolving, especially what the sentiment is concerned about all of this. Okay, and that is probably going to be a bigger driver than what's happening really on the charts today. We've also seen, and I don't know if I've got it on my charts. But okay, I mean, all the spreads are widening in Europe. I mean, in sympathy or negative sympathy with what's happening in those French rates. At the same time, though, and that is then where I wanted also to draw your attention to for what's happening in the Japanese yen, is that even the US yields are coming down as well, and that is an additional weight on what is happening in the yen. We are on interesting levels here in the in the 10-year in the 10 years on the dollar. If you look at it, we did break above this trend, this channel here already, but now we are buying against the top end of a newly formed wedge here in the US bond market, and we can see it here on the yields as well. We are coming back. The yields are coming off. I think the market has still this tendency of trading everything as one big pot. So I mean, if you see European, barring the French yields and perhaps the Italian also yields, but I'll show you the German yields are coming off as well. But if you see one bond market moving, the other bond market is dragged with it as well, because you can see this is the morning move in US yields, which of course correlates with the notes move, and they're also coming down. I do think there's a little more to this, perhaps, is that the market has now digested the FOMC and is looking at what the CPI did, is looking at what the PPI did as well, and perhaps being a bit cautious of all global major yields. And as I said, we see it on the German yields as well. They're coming down. EU yields in general are coming down. If you look at the other ones, they're all coming down. Yeah, Canadian yields, Aussie yields, sterling yields. It's all still one big pot of net. This bond market, and for the time being, this is just driving virtually everything. So if you look at why the cable is weaker, well, sterling yields are coming up as well. If you look at why the Aussie is coming down, despite US yields being lower, well, Aussie yields are coming down as well. So still one big basket, those bonds. Okay, right. Looking at what's happening in FX. So this was a bit of a support area right here for me in the euro, but as we've already been showing quite a few times, we are in this one big triangle, okay, on the euro dollar. I would really be very, very careful if we start to break 168.45.50 for a starter. 106, sorry, 45.50 for a starter. And especially, of course, 106. If 106 goes today, for instance, because we do have a bit of additional data out, I think the Michigan, and we do have also, I think, Goolsby and, if I'm not mistaken, Williams out as well from the Fed, speaking about economics. So they may, if they still are adamant for only one cut, they may push this euro actually even lower. Okay. Yeah, Brand, 78.6. Yeah, right here. Yeah, 106.70. Yeah, that's a level that we've traded as well in the past. Yeah, 106.70. So perhaps the market is recalling those levels. So that for the euro dollar, but we are seeing on all the euro crosses that they are very, very heavy. Now we are in those low 84s here on the euro sterling. I'd say watch what's happening just below. And 84 is going to be a bit psychological, right? We see this traffic area here before those spikes lower. 84, 84.10. We are in a bit of a zone here, but of course we cannot rule out more European weakness to end the week. So before thinking of catching a knife here, I'm going to be very careful to see where Europe closes the week, and then especially like all of it, the euro dollar, the EU yields, the spreads in that we have in Euroland. That's going to be very close on my radar before thinking of trying to find a bid in any of the crosses. If you look at, for instance, Euro Canada, which was quite bid for a while on the weakness, on the back of the weakness of the Canada. It's rejected, and we are now well back inside this wedge and actually getting closer to a bit of support here in the sorry, high 146 is close to 147. We should find a bit of support, providing that the euro is finding support. Okay, that is going to be the main driver, is the euro side of all those crosses. I'm going to have a quick look at what's happening on stuff like Euro Kiwi, for instance. We are now getting very close to that support zone here in the high 173s, and that is one that's going to trade with risk as well, because I'll have a look at the equity markets too, and Kiwi and Aussie are obviously currencies that trade quite a bit with risk as well. So we could actually, in these ones, find a bit of a bid if we find offers in the equity markets. And I'll look at the S&P a bit later. But for me, I'm still a tad short of this one. But I'll be a happy camper if we get another sell-off today in the euro. I'll be gladly taking some profits ahead of the weekend, because we never know what's happening on Monday, right? I'll straight away move on to this, because speaking of what may or may not happen on Monday, as we heard from Ryan yesterday, this today should be the last day of the buyback window, the share buyback window in the US, and we are really wondering what's going to happen afterwards. If it is the case, we may see a last leg higher, perhaps, into the US session, people doing their last bit of shopping. But then, as we've already warned yesterday, it could be that this loses its bid. Okay, the barometer, either for the end of the week or the start of next week, will obviously be this 53.80 zone, 70.80, 70.80, 53, 70.80 on the S&P. That's going to be the barometer. And as we have seen on most of the equity markets, especially the European equity markets today, with all that's going on on the political side, are suffering. But it could be that they are finally causing a drag on this one as well. I'm talking about sometimes the rebalancing, and I guess in parts that's been happening as well. The reason why US equity markets have been holding up much better, rebalancing from Europe back into US markets, for instance. But is this going to last? And that is now the question that I have. So I was long from the break of back above here, above 52.80s. I've taken the rest of today, and I really want to err on the side of caution now, going into the Friday, going into that supposedly end of the buyback window, and I want to wait to see what's happening on Monday with all those equity markets, okay? Because I think next week is going to be very, very important. Right. Let's see what happens on the yen. So we had on the announcement and on the being not so clear on what the plans were after the initial statement in Japan from the Bank of Japan. So we heard plans, yes, but we are not sure what those plans were. So the market, since the Bank of Japan did not change anything, and since we see here, if you look at the top end of my screen, Japanese JGB yields being still comfortably under 1%, we did not see a jump, which we may have, which we could have seen in case the market would have bought into the outlook of a reduced bond buying program. We could have seen a bit of a jump here, nothing. So what happened? I'm going to go on a just shorter time frame. So this is your with pre-Bank of Japan, a bit of nervousness. Bank of Japan comes out, we're rallying to 158.25. 158 was a tad important there. We had, this is now looking like a false breakup. I still think much more has to do with what's happening in the cross side of things. But the market also, during the UEDA meeting, already started to turn, okay? So I think we need to be very careful with it. I've bought it. People in the room know I've bought it, but I've let a lot go. I've let actually 2/3 go on this rally up because I do have a call running as well, a little bit higher here into next week. In case the dollar would have gained a lot of strength, I prefer to have just how should I say, my risk on my premium rather than having a lot of cash in it. So whatever happens here, if I get stopped out, it's going to be at worst some kind of a zero-sum game. But yeah, I bought it as well. But now we're seeing quite a bit of a reversal here, and that has to do a lot with what's happening in this one, this euro yen. Okay, so we saw the jump on the BOJ, and then this happened yesterday. Oops, sorry. So this happened yesterday, and once Europe came in, it happened again, okay? So I think this is really what is driving the everything in the yen pairs right now. It is the euro yen, because the euro yen has really been hammered, okay? And we are back below those, or we're actually now rebounding just that slightly. We are around this this spike low that we had early June. So this is one that we are that we should keep an eye on. I'm just going to let me hide this one and put a bit of a fib on here of the last move. So, oops, sorry. So we are getting, we've broken under those prior lows here, 168.30, triple low here after that spike, and now we are below. So this is quite important in my opinion. And now we have to look at what's going to happen in that mid to low 167. Okay, we had another low here, we had a low here, we had a low here. We had a bit of hesitation here before doing the leg back up to 170. So I think for the end of the week, watch out what's happening here in the euro yen, all right? Because what's happening on the yen process right now is actually driving the dollar yen. In addition to what I've shown you here, also the rest of the yields are also coming off. So that is a double weight on what's happening in yen. Okay, so you have to be a bit careful on what's going to happen in the end. And actually, I would not even be surprised if for the week, at least, that the yen firms up even a little bit more, depending on what's happening, especially on those crosses. Okay, another one. This one is still holding. But look, we had this uptrend channel in the Kiwi yen. Kiwi yen is still a bit stronger than the rest relatively, but keep an eye on what's happening at if we would be no, hang on, this is much too long. If we would happen to come closer to mid 95s, okay, mid 95, 95.40-ish, perhaps a little lower. This would be significant if this would come back down. I think if there's one that I wouldn't mind holding if the yen really stabilizes and shows a little starting to show weakness again, this is one that I'm going to keep a close eye on, perhaps to catch an eye. But if we break back below, I wouldn't. Okay, so this is the interesting one. And the other one, which is really interesting, is Aussie yen. And Aussie yen keeps on banging its head against 105, okay? Blake as well highlighted this one. 105 in the Aussie yen. This is really, really a brick wall, and it doesn't want to give way. So that is also one that is now very, very interesting around that level. And if we start to get below, in the short term at least, we start to get below a bit sketchy, I think. Oops, I think I'm losing you guys. Am I back? Can people hear me again? Because I just had oh, thank you. I just had a little cut there in my. So I was saying, yeah, and here we go again. So Aussie yen to be monitored. Okay. Let's look at what's happening, because I know Brad and others are very keen on to know what's happening in sterling. Look who's showing up again. 126.90. Stretch it a little bit on algo pips. Okay. I wouldn't go down to 126.65, but give and take a few algo pips, 126.90. It's still showing up. Okay. And I think it's going to be good enough again for the rest of the day to monitor this level closely. If it would really break, then perhaps there's a bit more downside to come, down to low 126s perhaps. But this is now in a bit of danger. All right. Well, the party for the pound is over. Ali, I'm just reading what Ali is talking. This is not really sterling driven, because if you look at euro sterling, sterling is still doing relatively okay versus its main trading partner. This is really dollars, a bit of flight into safety perhaps, but it's especially driven by euro dollar, and the dollar not giving up in after those CPI and PPI data, and after the FOMC. I don't think it is pound driven, you know. Well, that's my feeling anyway. And now I'm starting to read other comments. What do you think about the dollar strength? The dollar strength, I think, is a lot to do with risk, okay? Because not all your dollars are equal. If you look at, for instance, dollar Swiss hasn't moved. Dollar yen is actually lower now. But the dollar is a safety instrument, right? And that is now what is happening here as well, I think. And if you look at the other safe havens, Swiss, Euro Swiss, for instance, has lost a lot, okay? Swiss is still a risk, a very, very big risk currency. And that thing, if you look at the Euro Swiss, there's Euro weakness in there, but there's also risk in there, okay? So all your dollars will not be equal because dollar Swiss, for instance, and I'll take this one away, even though it's still important around 89.75 in the dollar Swiss. But if you look at the shorter end, dollar Swiss hasn't moved. And from yesterday, post the numbers, dollar Swiss really hasn't moved. So a lot has to do with what's happening in risk with the euro pairs right now. And yeah, I think you look at your levels, right? In the cable, I think the cable level is quite clear right here. Stretch it a little bit if you want to 80, if you want to avoid getting caught up in algo moves or a quick stop run. But for the time being, this level still will need to be respected in my opinion, although we broke a bit of a trend line on the back of it. But yeah, this is where we are right now. Yeah, as I was saying, and I'm jumping a little bit from the one to the other here. By the way, guys, if you want to ask me something about anything in particular, just let me know. So dollar yen, I do have a little bit of a level here, just in the 156.90s. Okay, it's also the low pre Bank of Japan, bit of spikes here. I think if this level goes, I'm gonna be out of the rest of my. It's a lot smaller now, cash, because I don't wanna get caught up in a mega risk of Friday afternoon market, if that were to happen. Okay, so be a bit careful if it breaks below 156.80 on the dollar yen, and also below. Then we have to go back on a little bit longer time frame. Here, this one. And that is low 156s. The big one will still be 155. I think 155 has the potential now to be the new 152, okay? So 155 is going to be a biggie, in my opinion, if it ever comes there, okay? For the more medium-term move, although it's Friday, we can't exclude anything. But that's going to be a biggie. If we start to get back above 157.70 for a starter, 70.80, the biggest scare for the yen may be over, okay? And then I think we could gradually move back above levels closer to perhaps 159. But I'm not sure we're going to see this today with what's going on in all the rest, okay? So this is, as I said in the room, I think yen today is going to be navigating between the icebergs, all right? Because and the icebergs are quite significant. We can see here sterling yen was on a bit of a rampage, but now we are already back below those prior highs as well. That also has to do with risk. Okay, so your measure point here is 200 for a starter, then 260.65. If it goes back above, then perhaps the main scare in the yen is again over. But once more, I don't know if I will trade any of it from here. Okay. Okay, let's look at a few other things before we close for the week. By the way, we do have. Let me see where it is. We do have. Where is my? We do have, as I said, a few speakers out. And we do have Canadian data out, but we do also have the Michigan out, okay? We do have the Michigan out this afternoon, so keep an eye on that one when you're trading dollars, because it could have an impact on your yields also in dollar, okay? And sending, especially stuff, I would say, very sensitive, like yen, for instance, right now, or the cable, or something like the Swiss, it could send it from one side of the room to the other, okay? So yesterday we had a bit of a move back down below this 18.5, and I think some short-termers may have gotten a bit scared of this. but dollar mix is already going back up. Okay, I think this one as well. It's still not. I mean, Scheinbaum, yeah, Scheinbaum and AMLO are still hammering on the fact that they are going to press forward with their reforms, so that the move down here, helped with risk off that we are seeing right now. The move down here has been short-lived, and we're already back above 1850. So your 1850, I think, is still going to be your level of the judge for strength or weakness in the dollar mix, and it's going to drag all the rest with it. Euro mix is a different animal, of course. Looking at what's happening in the euro on the euro side, this is now back below 20, but it's not completely giving up. Okay, we are still hovering very close to the 20 zone here. I haven't put any fibs on it, but I trust that yeah, we've gone back around the 23.6, a bit of stops below, and now we are trying to trade above you. I'm going to steer away from it because I can't buy euros, and for the time being there's likely no reason at all to buy Mexican peso ahead of the weekend. After the weekend, we don't know, but ahead of the weekend, I'm not going to touch it. Dollar rand. Okay, positiveness on the coalition, positiveness on the coalition, positiveness on the coalition, and now we are trying to base here in this just below actually the support level, but it's still an emerging market currency. We still have to take that into account, that it is an emerging market currency. So those levels can overshoot, whether it's on the downside or the top side. We're slowly starting to find a bit of a bid. Okay, so those in the room know. Yesterday I grabbed just a very tiny one, just a starter. I'm going to look at what's happening here, but especially in the low 18s, if you would see a bit more positive vibes coming out of the rand, or the market still want to trade it a bit positive. They still will talk over the weekend, those people in South Africa. So there is a bit of weekend risk here. If it would be positive, we may see a little bit of a gap lower, or if there would be something happening on the dollar this afternoon, we may see a little bit lower. But I'm still planning on loading some up around here as well. I'm virtually through everything, guys. If you have anything else to look at, be my guest. Or gold, 1525. We're in the middle of it. If the dollar, if we see those yields continue to be heavy, I wouldn't be surprised if this closes on a strong note, despite euro dollar coming off, despite other dollars perhaps being a bit better bid. I think precious metals could do relatively well, because it's a bit of a safety zone, right? For people if you don't want anything else, precious metals may be the ones that are going to hold up towards the end of the week. Silver, they're trying, Michael, they're trying, and we are in a little bit of a downward channel in the short end, but it could still be a big sideways to lower consolidation with all the rest. But they're holding, right, in those 28s. It's holding, and I'd love to see it back here to just. I think I may add a little bit. In fact, Michael, if we see it down here, it could be one to keep an eye on, to a mid 28s. Okay. Okay. Last question for the day. Out of the box question: do robots work in forex trading? Yes, of course. If they do, should they? Yeah, robots. Those are the algos, right? Black boxes, algos. Yeah, Michael. Okay, you've got an order in at 28.5. Makes sense. Makes sense, man. If they do, they should be making billions. If they do, would they sell to us? Well, I mean, and it's just models. People are making models on the back of moves. People are making models on the back of fundamentals. I mean, asset managers. But this is going to take me a while to explain all of that. So, but I'm going to keep it very short. Some asset managers, like the big ones, like the BlackRocks or the or Vanguards, they are running hundreds of models, robots, black boxes, how you want to call them, hundreds of models, and they trade in all different markets, all of them. If you look at CTA funds, they only run models. I mean, if for instance. Gold keeps on going higher and higher and higher, they will probably buy every day. This is a different model, but yeah, all money managers are running models right now, and privateers are running models too. You know, if you want, you can build a model and plug it into your broker. Most of the broker accept that you run models on their platforms as well, because they are getting the brokerage, so they don't really care whether you make or lose money on the back of it. And that closes the vote for this Friday, friends. I'd say be very, very careful out there. It's not looking great for the euro. It may drag everything in its wake, including the yen. Okay. I'm going to whatever I do, it's going to be small. I'm a little short euros. My dollar yen is going to be at worst a zero-sum game, and still running a bit short euros, kiwis as well, and that's really I'm going to keep it simple and stupid for the rest of this week. So take care, and we talk to each other on Monday. Thanks for joining me, and have a great weekend, everybody.